Welcome, ladies and gentlemen, to the Alcandros International Trading Podcast. This is your host, Constantine Cal Alcandros, owner and director of Alcandros International Trading. Today, we're going to cover another article by Reuters. I usually do cover a lot of Reuters articles because they're usually quite good. They go into a bit more depth and they cover. They've got a little bit more, it's a bit more focus sometimes from Reuters on international trade, geopolitics, than some other newspapers or editorials. So this one's only 4 hours old, so it's just basically come out. It's the title. The title is Thai Quarter 2 or second quarter GDP growth slows sharply amid weak global demand. Government cuts outlook. Recently, I've been covering a lot about China. And for good reason, because China is the world's biggest importer and second largest economy in the world. But I thought we'd take a look at something different rather than keep, constantly talking about China. That can get kind of boring and kind of repetitive. So I thought we'll see what's happening with Thailand, because Thailand is another country which does export, have a few things to export. Not a big importer, or at least not anywhere near the same league as, say, China or the U.S. or other countries. But this is still important for international trade, because Thailand is still a country that you do see involved in international trade and is a player in the international marketplace because of its cheaper goods. So let's look at this. So by Orathe Searing and Kittafong Thaikarion. Oh, wow. Okay. Bangkok Reuters, Thailand's economy grew at a much slower than expected pace in the second quarter. Data showed on Monday as weak exports and slower investment undercut strength in tourism and prompted the government to downgrade its 2023 growth forecast. Southeast Asia's second largest economy has been hobbled by slackening global growth led by its main trading partner China and falling investor confidence due to a protracted period without a government following elections in May. Thailand's gross domestic product grew 1.8% in the April to June period, second quarter, from a year earlier. So that's good. The National Economic and Social Development Council, NESDC, said well below the 3.1% expansion expected by economists in a Reuters poll. GDP has risen 2.6% year on year in the first quarter, revised down from 2.7% stated earlier. On a quarterly basis, GDP rose a seasonally adjusted 0.2% in the June quarter, also sharply under a forecast rise of 1.2%. The second quarter was hurt by export volumes falling 5.7%, which is quite a lot. That's quite a heavy drop year on year, and dragging manufacturing output down by 3.3%. Again, that's quite large. These don't sound like big numbers, but they are large numbers. When you think about it, that's 3.3%. I mean, that's in a country of, I don't know, what's Thailand's population? Hey Google, what's Thailand's population? Let's see what it says.
In 2021, the population of Thailand was 71,601,103.
Okay, so 71 million. So, it's probably now in 2021, 2023, maybe it's 72, maybe 73. So 3% of that is, what is that? 3% of that would be, a couple of million people. So output's down 3.3 million. Now, I know that's people is different from manufacturing output, but you have to sort of think, well, manufacturing output's down 3.3%. Does that mean that, potentially you're looking at 3.3% of people not working in the future because of manufacturing output? So, that would have, huge implications on the Thai economy. So, or at least heavy implications, at least anyway. While government spending also rose, while government spending also declined 4.3%, which could be a good thing, depending. If you have inflation, if you have inflation, declining government spending can be good, because that would actually lower the amount of dollars, or at least in this case, I think it's baht. I think the Thai currency is the baht. So With less spending comes less. Well, it's not so much, I guess, the spending. It's really got more to do with the printing of money. But less spending. Yeah, I mean, if it's spending less, then it's probably the government's probably saving, and if that's the case. So that helps to pay off any debts the government might have. So it's not necessarily a bad thing. It really kind of depends on the situation of the economy of the country. The global demand weakness prompted the government to cut its 2023 GDP growth forecast to between 2.5% to 3% from a range of 2.7 to 3.7. Adding to the headwinds, NESDC head Danuka Pikayanan warned that investor confidence will suffer further if problems arise in the transition to a new government. If there are drastic events in this transition, it will affect investor confidence, he said. Thailand has been under a caretaker government for 5 months and faces prolonged uncertainty after the winner of the May election move forward was blocked from forming a government by conservative legislators allied with the royalist military. On Tuesday, Parliament will convene to vote for a new prime minister when the second-place Pheu Thai's candidate, real estate tycoon Sretha Thavisin, will be nominated. First quarter GDP was revised to 1.7 from the earlier 1.9 increase. As weak global demand crimps exports, Thailand's economy has been supported by its vital tourism sector and a private consumption growth. Yes, Thailand has a very strong tourist sector, and that needs to stay put in order to keep the economy afloat. So I don't see there being any issues with that. Thailand is still a go-to place. The currency is not competitive, but it allows people who've got U.S. dollars or stronger currencies to go to Thailand. So, but because Thailand's currency is weaker. Hey Google, what's the Thai currency called?
Thai baht is the currency of Thailand.
So because Thai baht, the baht is a weaker currency, it's actually good. Sometimes having a weak currency is good because it attracts tourism and it attracts commerce, because people are going to go wherever it's cheaper to travel or do business or whatever. So that can actually help. So I don't think that's going to change anytime soon. Private consumption, well, that could hurt in future if there is less economic activity. So we'll see. But tourism will always be there. The agency maintained a forecast of, unless there's a massive global cooling and Thailand becomes a frozen tundra, then it'll lose its tourism, but that's not going to happen anytime soon. The agency maintained a forecast of 28 million foreign tourist arrivals this year, but expected tourism revenue to decline. Danuka said it projected exports to drop 1.8% in 2023 versus an earlier forecast for a 1.6% fall. And that is it. So basically, you can see Thailand's also another country, not just China, who is kind of, is in economic depression. Look, the numbers are still going forward, but they're not as high as predicted. So I guess really, this report isn't really something to worry about. But I guess what I take away from this is that, yeah, Thailand does have some things it needs to look at. With a drop in exports means that Thai companies are making less money, which means that they have less money to spend or invest elsewhere, which means that, it doesn't necessarily, it can affect the baht if that money is not being invested or doing anything. At the same time, though, if that money isn't being lost and is simply being saved, that can keep the currency stabilized. So I guess really, it's not really too big a concern. But yeah, if you're exporting less, then yeah, obviously Thai companies are making less money. Less money is coming into Thailand, which further kind of potentially restricts what you can do, or what Thai companies or businesses can do. So yeah, why are they exporting less? That's a good question. Well, we know China is Thailand's biggest importer, as it says here, or biggest customer. So That's not surprising. I mean, we've said several times before in previous editions of the podcast that China has been, and we've read the reports. China is has declining imports of products for various reasons. I'm not going to get into. Well, I'll say for the record, decline of manufacturing is the major one, and so with less demand for raw materials from, say, Thailand, means that basically Thai companies can't sell their produce, so they're going to have to look elsewhere. And I keep harping about this, but India is going to be the new China, so Thailand should look to India as a place to sell their goods. So I think right now a lot of companies find it easy just to go to China because China's the biggest importer. But I think we're going to start to see trade go in more multiple directions. I think you're going to see more of a I don't want to say multi. That's really more of a geopolitical term, but I think you're going to see more trade happening in other parts of the world, say to India. So to take away from this, Thailand needs to look at, to some degree, looking at other trade partners like India. Like, for example, India is the major one I can think of. I'm trying to think of another country, at least like another really big country that has, I mean Brazil, but Brazil sort of produces a lot of its own goods. I'd say maybe India, probably Bangladesh. Bangladesh is very close, and Bangladesh is a producer of lots of different things, clothing for one. So Thailand could potentially look to maybe increase its trade with Bangladesh if that's the case. Maybe Japan. Since Japan produces a lot, they've got a strong manufacturing base in Japan, South Korea too, potentially. So we'll see what happens there. They probably already do business there, no doubt. But I think you're going to see the percentage of, say for example, if trade with if exports to China make up 40% of Thailand's exports, then that they would probably have to look at lowering that maybe by maybe at least 5, maybe probably at least 10%, and start looking at other trade partners to trade opportunities in other countries to sell their raw materials or any other goods to. So, like I said, the takeaway from this is that the Thai exporters need to look and build relationships in other countries further in order to sell their goods. Anything more from this, really? They definitely need to get that government stabilized. Because an unstable government creates unstable times. Because companies, businesses don't know what to do if they don't know what government's going to be in power tomorrow. If they think that the next government's going to be a very anti-business government, then they want to know beforehand. They want to have their plans in place to know what to do. But if things are sort of on the fence, then it's hard to make decisions. So I think this also probably hasn't helped. So they'll need to get that situation taken care of as well. Outside of that, Thailand's issues here really seem more to stem from, its decline in manufacturing is also because there is less demand for their products because of China. It's all coming. China is the linchpin in all this because China's lost its manufacturing base. They're importing less, which means that exporters in Thailand, businesses in Thailand don't need to produce as much because there's less demand. So less demand from China means less demand, less production. So that's where I'm saying it all comes down. They just need to build relationships in other countries and increase the volume of trade with these other countries to make up for the lack with China. So that's it. I'll just thinking whether I'll cover some other articles in this. I think we'll leave it there. I'll plug I might do another edition later today. We'll see. But for now, we'll end it there. I'll just shamelessly plug our website, which is www.alkinjosstrading.com. There you can join, become a member, use our forum to make requests, promote your sell offers, meet buyers, meet sellers, make friends, ask questions, answer questions. You can find out more about us, about our team, what we do, who we are, our services. We provide a variety of services, what products we sell, what our procedures are. They're all there. you want to contact us, you can contact us through there. We're also on Facebook, Instagram, vContact, Gab, LinkedIn, WhatsApp, Telegram, and what else? Have I missed out on anything? No, I think that's it. So you can contact us via those methods as well. So yeah, we'll leave it at that. That ends this edition of this August 21st edition of the Alkindros International Trading Podcast. This is your host, Konstantin Kai Alkindros, owner and director of Alkindros International Trading, signing out.